there, welcome once again to the Dukascopy TV studio here in Geneva. I'm Ben Jones. Alongside me to discuss preserving capital in the short and medium term is Pierre Vassart, the Chief Investment Officer at Dukre Asset Management and Denarius. Pierre, thank you very much for joining us today.
Thank you, Ben. Thank you.
Now, if we look at the market at the moment, stock market is reaching increasingly high levels, and come October we're going to no longer have QE from the US. So where should investors focus now?
Indeed. If we look at the performance of stock markets in the last 2 years, in 2012, 2013, which is shown here in the green bar in the middle of these charts, we can see fairly substantial increases in share prices. This is a combination of two factors, one being the structural improvement in the fundamentals and the profitability of the companies themselves. But the second one, and more important probably, is also the huge liquidity injection from central banks, from the US central bank, from the European central bank, Switzerland, Japan, and so on and so forth, which is providing a lot of fuel to the rally. In fact, we have a situation where endless amounts of liquidity in the US. Now we are talking about $4.4 trillion in balance sheet, as opposed to less than $1 trillion in 2008, chasing a limited number of shares. Accordingly, stock markets have been moving up. Obviously, here you might be tempted to conclude that stocks are the place to stay. However, they are worrying signs. They are worrying signs because we cannot consider that equities are now underpriced. They are probably fairly priced, or maybe fully priced even. The market capitalization of the S&P of the US, of the total US equity markets, represents now 110–120% of the GDP, which is double the level it was 5 years ago, and which is at the highest point since March 2000, March 2000, which was a prelude to a big drop in the market. So investors have to be careful and have to take into consideration those worrying signs. I must say, if you talk about 2014, two items have also been contributing to performance, at least in the portfolios in Denarius, which we manage. One are the Asian currency bonds, which have provided returns of 10% year to date. The other one is the US dollar positioning. So the currency diversification has been a positive contributor this year so far.
Discussing equities again, as you mentioned, one of the reasons for improvement is the fact that companies themselves are improving, they are getting better. So how much focus should investors put on a portfolio that has these big name companies like Coca-Cola and like Nestle?
In fact, you could say that having those large companies that you might be able to sustain any downturn, either in the economic cycle or in stock markets. However, history proves that buying a strong company at a high price is never a profitable investment proposal. And obviously, now we can look at historical precedents, and I've shown here the bear markets of the 1930s, which bear a lot of common characteristics with the liquidity-driven markets which we had in the last few years. And you can see that the Dow Jones, which had increased by 400% between 1921 and 1929, decreased, however, by 80%. The S&P Composite by 86%, And Coca-Cola, if we take Coca-Cola, which is a very strong and well-managed company as it was at that time, you can see that even Coca-Cola did not escape the downfall and lost more than 60%. I've indicated other names which were in the Dow Jones at that time, the Douglas aircraft, you know, the predecessor of Airbus, and Boeing, minus 86%, and Chrysler, which lost 85%, being a more cyclical stocks. So what I want to point out over here is that the effect of liquidity, central bank liquidity, which in the short term provides support and ingredient for a stock market rally, but which in the longer term, in the medium term, provides problems as the stocks get sold. In fact, this is what we can see over here. You can see that in a bear market year like 2008, stocks lost 40%, and they regained 30% in 2009. So basically, the performance is not only looking at separate years and outperformance versus a benchmark or not, but is more one has to look at the entire cycle over the medium term, which is over a period of 6-7 years, so that you can see really the vagaries in the different asset classes. What is striking over here, if you look at the left, the reflex discretionary, which is a special program which attempts to be positive irrespective of trends in bonds and stock market, which outperformed in 2008, and which obviously in a bull market year like the following year underperforms the stock market. But you can see that there is still a need for such a diversification.
Okay, so in light of everything that we've looked at, what can investors learn from this, and what should they do?
Well, first of all, what I would like to say is that improvement in a company, in the intrinsic value of a company, a rise in the intrinsic value of a company, it can rise by 5, 6, 7% a year. It cannot rise by 20% a year. And this explains the decline in the Coca-Cola stock, which we saw earlier on, because in fact, the companies, they create value, but they cannot create value up to 20%, with one exception being the technological, or when you have a company with a new product, which is a revolutionary process, or a revolutionary product, which then can attract a lot of sales. But what you can see on that chart is really the medium-term performance. And really what it shows over here is that in the medium term, what is determinant is not only the fact one specific asset class has overperformed, underperformed versus the other, but is whether the investment program has managed to compensate or to preserve capital in a downturn. And this explains the outperformance on the left of the reflex discretionary, which is explained by the fact that in 2008, 2011, they were positive. I would say in terms of different items, in my opinion, the Asian currency bonds will, on a fundamental basis, continue to perform well. Because they are not affected by QE or by the ECB bond buying program, and they have internally a strong position. The US dollar in the short term will do well. However, the medium term will depend on what Janet Yellen is going to do vis-à-vis this balance sheet of the Fed. And on the other hand, prudent investors should definitely reduce risk associated with bonds and stocks and should allocate to carefully selected alternative investments that are able to produce results even in a downturn. Those prudent investors, they will preserve and grow their capital in the medium term, even if they underperform in the short term.
Fantastic. Pierre, once again, thank you very much for joining us.
Okay, thank you, Ben.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.